Everyone is looking at the market and asking the same question. Why is everything going up? Should I invest? Will it correct again? Or is something else happening underneath? Let's decode this, not with 10 charts, but just a sequence. Because once you see the sequence, the structure becomes very clear. Let's start with the year 2020 when the COVID crash occurred. Interest rates went from normal levels to near zero. Not gradually, not slowly, almost instantly. This was not a policy adjustment. This was a system response. Liquidity didn't just increase, it flooded the system. And when the price of money goes to zero, everything else gets repriced. That's exactly what happened then. The market didn't wait for growth, it didn't wait for earnings, it moved because liquidity was injected into the system. So the first equity rally was created. Then something changed in 2022. Rates didn't stay at zero. They moved from near zero to over 5%. That's one of the fastest tightening cycles we have seen. And the market reacted. Not because growth collapsed, but because liquidity was being withdrawn. So this phase was simple. Liquidity in, market up. Liquidity out, market corrected. Now this is where it gets interesting. Because after 2022, the market didn't collapse. It stabilized and then started moving higher again. But this time, something changed underneath. SOFR volume. This is not price, this is activity inside the system. And what do we see? The volume of borrowed money moved from around 1 trillion to over 3 trillion, which means every night $3 trillion are borrowed to keep the system functioning. The system is literally on a ventilator. It needs 3 trillion every night just to survive. If you want to learn more about SOFR, the secured overnight financing rate and how it works, check out MarketVelugu's Liquidity Stress series, where I covered this in depth. Link in the description below. Now, SOFR volume hike from 1 to 3 trillion in just 3 years is not small. That's the system working harder. Not new liquidity being injected, but existing liquidity being used more aggressively. And at the same time, equities are rising. So this phase is different. The first rally was created by policy. This one is being sustained by the system itself. S&P 500 recently closed at a new all-time high around 7,165. Nearly double its 2022 lows of 3,500. Now here's where the story shifts again. If this was just a stock market story, gold should correct while stocks go up, because gold and S&P 500 have an inverse relation. But that's not what we are seeing now. Gold started rising against equities in 2025. And silver moved violently. Not just rising, outperforming. That's a very different signal. Because when real assets begin to outperform financial assets, it's usually not random. It usually means something is changing in how capital is being allocated. This is not liquidity lifting markets. This is liquidity starting to move differently. So now the question becomes, what happens next? For years, equities have led. That has been the dominant trend. Look at this long-term gold versus SPX chart. There are cycles, periods where equities dominated while gold corrected, especially between the years 1980 and 2001, followed by periods where gold took over between the years 2001 and 2011. And right now, Gold has started its uptrend again in 2025, making higher lows against SPX. We are coming out of one of the longest equity dominant phases in history. The relationship between gold and equities is no longer falling. It's stabilizing and beginning to turn. The direction is changing. So if you step back, the sequence is very clear. The Fed created the equity rally, the system sustained the rally, and now the question is not whether markets go up or down. The question is what leads next. Because markets don't just move, they rotate. And the story is not over yet. It's just a new beginning for real assets. If you found this useful, don't forget to like, share, and subscribe. You're watching MarketVelugu, Light on Markets. And our mantra is, ignore the noise, follow the structure. See you in the next video.